Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, May 26, 2022. What I'll do is a brief update on the equity markets. Not much to say. Everything went as planned today. We had a nice breakout above 294 and the comparable levels I was watching on a NQ and everything else, and boom, we got the pop I was looking for. And again, I believe this is the beginning of a rally with a lot more meat left on the bone. I'll get back to the charts in a second. I just wanted to do a brief update. Well, actually, let me go off on a tangent here. There were a few inquiries on the site today regarding crypto, so I did share my replies, and I'm also going to go over those charts since obviously, several members asking about crypto. Gave my thoughts there and some levels, but I'll actually go over the charts in this video briefly and share my thoughts again. And that reminds me, last week, member Blueberry had asked, and I just want to let you know that I've replied to you. I told you when I got back into town, if I didn't post anything by midday Tuesday, sorry, I got it out to you yesterday. I did reply with that chart you were asking about the FTSE 100. I primarily trade the U.S. markets. I don't follow. At times I will follow, or if a member asks, I'll give you an update on your markets if they're overseas. And my reply in that, and there's a chart. Just go back to that post from last week and you'll see it there. But my thoughts were, we'll get a little upside is along with the U.S. markets, because the international markets, especially the developed countries, the DAX, the FTSE, they're usually gonna move in line. Not always, but for the most part with the U.S. market, especially during the big rallies. And but what I did give you, or for anybody else interested, so I think we get a little more upside here. FTSE's been holding up better than U.S. markets, but then I give you a target down here, all the way down to about 68.40 or so for the next leg down. So again, back to the U.S. markets, just to reiterate. I still think we are in the very early stages of what will likely prove to be a tradable counter trend bounce. At which point, once that starts to show evidence that it's likely run the course, I will uh, begin to pivot and show you objective levels to both book profits on longs if we trade it and or short. And as always, if I'm wrong and this is just a one-day wonder and I need to pivot back and position for the next leg down or exit my longs, I'll share that with you as well. So let's talk on that real quick for those of you that whether you're long or short, and the key levels to watch. This is a 5-minute chart. Again, I've been living in the world of the 5-minute charts a lot lately with the volatility. Normally in a regular trending market, it's like trying to squeeze water from a rock. You're going to have to leverage up a lot to make money on trading a 5-minute time frame. But when you have swings, daily swings of 3, even 5% or more, which is the norm lately, you can make plenty of money as an active trader living in the world of the short-term charts. But again, this was the whole thing was the primary reason for my closing all the shorts Thursday before last, and then starting to scale into longs that day, and building on those positions was the fact that, again, if you're new to the site, we had so many key both indexes as well as many key sectors and key stocks such as Amazon and Nvidia, all falling perfectly down to long-term targets that I had earlier in the year, step back in January or even late last year. And so those were good support levels. So it's a combination of the market being oversold at support, positive divergence. I really can't check many more boxes, and sentiment being pretty bearish. Now, remember, this is a bear market. I always say never trust a bear market rally. They look good, they feel good when you're in them, and I'm still bullish and long for now. But if something changes, and that's what I'm talking about in this video. Well, we broke out above my big 294 level today. Again, it's on the 5-minute chart. Harped on this for days now, and the reason why it's important. And so at this point in time, ideally that should hold. At most, maybe a slight undercut if the market makers and the algos want to try to clear some stops out and then grab those shares for themselves. That's what they do. That's what a stop rate's all about. But not much more than that. So you have the several uptrend lines I gave you all in this morning's video. This is the primary trend line off the lows, again on a 5-minute chart, but those are the lows. Secondary trend line and a tertiary or third trend line right there, the closest one What I think is going to happen, again, so all right, same thing. I talked about staggering stops. That's my plan. If they start to run down there, I'll be stopped out and or fully out of longs and maybe even to shorts before we even get to those lows. At this point in time, we've come up too much for me to, have keep stops below those recent lows. So at the very least, I want to try to sure, break even at this point. But let me show you what I think will probably happen. 60-minute chart right here. Same one that we've been looking at since before I left town, week before last. I did add this line today because it came in with some other resistance levels on some other indexes I'll get to in a second. And I noticed we had nice support there, really zooming in. You can see it also on the 5 and 10-minute charts. It's a level, and that's where we stopped today. So that's where what we need to take out. I want to talk about this. So we're oversold. I'm sorry, overbought. There's a 70 level on the RSI. Remember, 70 is typically overbought, 30 is oversold. That's the default on most charting platforms. And so here's what I think is going to happen. We had a big move up today. Typical traders are going to say, well, we're in a bear market, we're oversold. When you get oversold, like you were right here last time that's when they want to sell. And that's usually the case. But what tends to happen, remember, this is a setup that I've been talking about, bullish developments one after another, check in the box, and we broke out today. We had the breakout above the downtrend line, above my level. So this is, and with positive divergence in place. So let's talk about the last time I pivoted, and closed out swing and trend short positions. It was right here. It was on the site, pivoted then, talked about that, and then scaled back in here. Why? Because we took out that, remember that 60-minute bullish falling wedge that we had here in SPY and QQQ. That was our downtrend line. We had the divergence line there, divergent low 1, put in a marginal new low. That was divergent low 2 right there. And then we broke out. So what I want to talk about now is the overbought conditions for those of you thinking, yeah, bear market rally, you get 3%, that's when you get out. So back then, let's look at the red line. Remember, this purple line that's my line. I like to use my own levels as well. I know most people watch the 70 and 30, but every security I treat differently because each individual security, whether it's natural gas, crude oil, they all have their different upper end limits of being overbought. In other words, some things get much more overbought before they reverse than others. So in QQQ, in a volatile market, since the bear market started, that level seems to be about 80 right there, the purple line. However, again, a lot of people will consider, and it technically is 70s overbought. So, and it worked well, if you short runs up to the 70 level. But let's focus in on that breakout that occurred back there. Here, I'll park the PPO for a second so you can see the RSI a little better in the video. So there was our breakout, and at that point, just to get up right when we were testing the breakout, right when we got there, you can see the crosshairs, we were at that level. Right, we were oversold. I'm sorry, overbought. I was somehow inflect those a lot. We were overbought, and we hit it again. That's the overbought. We had a little pullback, hit it again, and then became very overbought. And look at this. We stayed overbought throughout that entire bull run after the breakout. So while this is sort of pivotal here. If we can build on these gains and move up and hit my next targets, remember, we already hit T1 and T2 on that first run up. This is just a continuation of that same trade. T3 and T4 up there. If we get there, you're going to build on that. Otherwise, and guess what? That's nice looking setup. I read the tea leaves wrong, and we're not going to see that 13% or so from the lows rally. Another, where we were yesterday was 10, and today it's going to be less. Again, that's just my ideal swing target. I see the upside potential of about 20% in this rally, possibly if we go back to the 200 days. And again, I'll update that as it plays out. Or this is just, a nice looking setup that will, like many other bullish setups in a bear market, fail to materialize. So that is it. So I guess the takeaway is, I'm not trying to give you wishy-washy analysis. I'm telling you, don't be married to any one bias that the market must do this or it must do that. Be flexible, react, and pick a side. And if you don't know what to do, I would say this: be out. When we get really the all clear, I'll give you that. When I think I can tell you this right now. If my analysis is right, it's going to be a long time, probably well over a year before the bear market is over. But there are going to be what might want some people call mini bulls and mini bears within there. Plenty of rallies of over 20% or more, and which are going to shake out most shorts. Anyone that thinks they're going to trend trade the next bear market down, they're probably going to second guess that or just feel the pain, get stopped out. So, um, as an active trader, I like to actively, swing trade the rips and dips or the rallies and the corrections. So that's it. I want to just point that out that yeah, we are overbought, and so that's going to bring in some sellers that did today. But where I think we're going, let me put back the PPO here real quick and bring that down a little. Squish these down so we can focus on price and show you where we're at right now. So if you strip everything away like this, here's the breakout we had, right? Broke out this morning as expected, and we ran up, and this has been an impulsive move right here, right? Even from this point, it's started out pretty impulsive. So this run here, because you had some consolidate, you had to move up and then consolidation. This run here could, and I believe it will likely prove to be a flagpole for a bull flag pattern. So right now we're flagging. We hit resistance today. Not just the Qs, but other indexes. I'll get to those in a second. And and we were overbought, and so you were a little profit taken at the close. And if the futures can either break out tonight or tomorrow morning without going down too much and ruin the symmetry of the flag, then you might have another buy, and you will have a buy. The next buy signal, I can tell you right now, will come on a break above today's highs, because that was resistance. You had pretty nice resistance about 301. Let me go over the other index as well. And look, we don't have to have a bull flag. We can come down a little more. It's just one potential pattern, something to watch for. SPY, you can see we had resistance here as well at about 407. It was this level. That was when we hit T2 last week. Remember on QQQ, that was the second target hit. We had that double tap there. So that was resistance on SPY as well. We also had a gap in there. Gaps are big levels. I always like to have lines around gaps. Traders love to trade around gaps. You had a couple reaction lows there and a major reaction low right there. So this is what kind of stopped the advance today. We ran into that. IWM, small caps, even bigger resistance right here. There was a major reaction low and a major reaction high. That in itself, that's good resistance. So and again, we had a nice day, up over 2% in the small caps, and I'll keep it very simple. So tomorrow, or anytime this week, anytime soon, whether we come back a little more or not. Again, I told you the levels that I don't want to see us violate, and if we're talking about IWM, which I'm at right now, I'll put a line for you right there, show you really good support there, about 178. You got lots of reaction high on the candle there, numerous reaction highs there. We broke out above it there, and then failed it, and we failed it. It was impulsive, and then we tried to back test it, boom, popped it today. All right, and the fact that, and again, this we ran up to what coincided with my first targets last week when I was out away, the charts I gave you before I left town. And that's where we stopped, T2. So I think now we've already checked it once, checked it again today. Next time we take it out, should open the door for IWM. Clear run back up here, I think, to about that we'll call it 191, 190-ish area. And that also jives with the daily chart. You can see that support right there, resistance. Resistance. And let's look at QQQ. Hey, something I forgot I meant to mention this yesterday, and I forgot in the video. Among other things that have put me bullish recently, is we had a bullish engulfing candle. I love these bullish engulfing candles. That is when the body, the fat part of a candle, engulfs the body or the fat part of the previous candle. So there was a body of the previous candle, yesterday's candle. You want to look for those at an extended downtrend. You don't look for them, in the middle or just during a period of consolidation, because they'll come, but they don't mean anything then. If you get a bullish engulfing candle at the bottom after a prolonged downtrend, especially with other factors such as hitting support, divergences, any kind of anything else there, it is a potential candlestick reversal pattern. Then what you want to see follow through the next day or in the following days, and so far we did. We had a nice big green stick to follow up today. I'll be honest, I didn't even look to see if SPY or IWM had it. Yeah, SPY had it as well. We engulfed that one right there. And IWM, yeah, IWM engulfed the previous candle right there as well. Not at the very low. They're supposed to be a reversal stick, but either way, QQQ is the index everybody's watching, and me included. To me, it's the most important. I think that seems to be the consensus because it's a proxy of the market leading stocks. And if the market leaders are doing poorly, then the stock market's going to do poorly. And if the market leaders start to become back in vogue, and today they were, then that's a bullish sign for the market. And that's why I watch QQQ, because it's a more concentrated weighting in those market leading fangs: Apple, Microsoft, Facebook, and etc. All right, futures real quick. NQ, this just couldn't have played out any better. There's that level 1285 been harping on. There's the breakout as expected. Boom, and that's the impulsive run. We rallied. Even now with the pullback, it's still up. The futures up 2.6. There was a 3% day, almost to the button. That's what I told you this morning. I think in the video I said I expected we'd close up 3% or better today, and we were at the highs, I think exactly right around. I saw us cross 3% on QQQ. So, and that's it. Remember, I had 12,350 as resistance there. Pretty good resistance right here. These lines that I've had, and the 23.6% Fibonacci retracement. That's the red line. The price resistance I had was 12,350, and that's where we rallied up to. And again, looks like a potential bull flag. So if you futures traders, you want to trade over, it could happen tonight. It may not happen. May not be a flag. One way to play it depends on your broker. If you have interactive brokers, for one, you can put buy stop orders. Let's just say you took profits there today, and you want to re-enter, and you might want to chase that flag or take that flag, but you don't want to sit around all night. Could break out at 8:30 tonight while you're eating dinner, or 3 a.m. in the morning. You can set what's called a buy stop order, where you have no position. You put a buy stop to trigger at a certain price. So pick your price point, or use that trend line trading tool. And I like the trend line can get popped briefly. Probably better to give it a little room. And if you want to keep it simple, that flag may or may not be a thing, but I can tell you that 12,350 is pretty decent resistance and a key fib, and it was today's major reaction high. So very simple. All we need to do, I believe, anytime tonight, ideally tomorrow in the regular session, is pop today's highs. And with conviction, not a little marginal pop, but a solid break, solid 60-minute close above those should open the door for the next leg up. And that would be, price resistance here at about 12,527 on NQ. Zoom back out, because that's what we need to do. Looking for a bigger rally, you need to zoom out a little farther in time. There's that trend line I gave you right there. Something like this maybe, and then work our way up to right now, which is kind of the target I'm eyeing, that T3 zone. These are also the targets I laid out for you before I went on vacation. T1, 2, 3. T3 zone comes in around 12,976 up to about 12,973 right there. And then for you ETF trader, well, I've already covered the targets on QQQ. All right, let's cover the rest of the things and wrap the video up. So the recent trade ideas I gave you week before, right before I left on vacation. In fact, it was the day I pivoted, covering all lows. Thursday the 12th, and one of those was Amazon, because Amazon had hit my long-term target, was laid out way back here in January, and that was 2043. We hit it there, we bounced, we checked it again, second weekly successful test. So I reiterated it, or re-highlighted it, I should say, as a trade idea again, right here with this marginal new low. And a nice day, up 3.5. This counts the after hours and the give back, so we were up almost 4%. We're still not even to my first, second, or third target, so I think there's more meat left on that bone. ZM, Zoom, just playing out as it should. Not much more to add. Trend line, we had the breakout above the 97.30 resistance yesterday. The volume's been great. Tells me institutions are getting back in this one. Nothing but green sticks so far. Plenty of room to run on that one as well. And then I have a new one for you that stood out to me today. I'm trying to. One thing is, it's easy to trade the Qs. Qs, I think, will outperform. I've been pushing the Qs and the small caps, just like I pushed them on the way down, meaning those are my largest holding. The two indexes. And the thing about indexes is in ETFs, futures, you don't have to worry about earnings. Adobe, I did check. Adobe reports. I don't know exact. I think it's in June, next month, around the middle of the month or so. So you got a little time there. Before you have to worry about earnings, but it's a constructive chart, and it's probably going to run along with the NASDAQ. If the NASDAQ continues to run, we had a breakout candle day, so this one hasn't gotten away from you at all. It's only up 1.32% today, and like everything, it's been building, big positive divergences. First target, roughly 425, 470. And let's just keep the 470 as the final target now. You see some other levels up there that are possible, but that'd be about a 16% run up to that 470 target. So that's a trade idea for you, and it's actionable. We broke out today, so you could take it today, tonight, and after hours. You could take it tomorrow, and I'd have a stop a little below. Pull it up. That support's about 390, so little bit below 390, maybe 387 or so. Tighter if you want, but I wouldn't even, if this craps out here, it means the market's crapped out. The breakout didn't stick. So again, I'm not giving anything down to those recent lows. If those break, it'll probably be a waterfall. And if we take out this level, we're probably going to do that. So I'd have my stop around 387, so 388, 386, somewhere in there. As promised, crypto. GBTC. I'll just go over the ETFs here. ETF type instruments, proxy kind of. All right, I've had targeted. This was a target a long time ago. I covered for you on the site 17s, where I said, I'd be interested in buying Bitcoin. Almost divergence. You have a slightly lower low, but you do have positive divergence on the RSI and almost equal lows there. So that would be your divergence line. 17s, that was a major reaction high back here back in 2019. So we're coming up on there. My comments were, I can't make a screaming case to buy it. Might have a little more downside. I'm going to get to Ethereum in a second. But here's the thing. They've been risk on, risk off assets. When the market's been falling, the crypto bubble has been deflating. Same folks that were chasing GameStop and all these crap stocks, are for a large part the people that chase crypto and things with no fundamentals. And those are risk on assets. Meaning when people are taking risks, they don't care about the fundamentals. They just care about what's going up. And so if the stock market rallies, you'll probably get some buyers coming back into crypto. And so there's your level. And what I said in that post or the comment section today is you might want to scale down. If you wait, we're at 17, 18 now, 17 support. It's not the best support, but again, it's a big reaction high. And it's a level I think we can hit. And I also gave you this trend line here, a long-term trend line here that we're roughly give or take on. By the way, this is the Bitcoin Trust. It attempts to track Bitcoin. It's not actual Bitcoin. You can open those through some Coinbase account or something. I don't put your money there. I'm not. I like to trade things that are regulated securities like this. And of course, this tracks Bitcoin, so it's going to go up and down with it. But maybe not perfectly. That's what I'm saying. So there's a little room that I give it, the fact that it's under the secondary trend line, and that's it. So if that's your thing, maybe take some Bitcoin here. Maybe I'll do that in a day or two. I'm just right now focused on the indexes, and the other ones, Ethereum, ETHE. I think that's the Ethereum 2.0, if I'm not mistaken. That's coming up on this long-term trend line I have right here. So ideally would be a little more downside, but again, you may want to start scaling in. But to get there, remember, this is a volatile little sucker. That'd be about another 14 or so % drop So it depends how I draw the trend line, but we're close enough. Again, you might want to start scaling in. If the market has another good day tomorrow, I suspect you're going to start to see risk appetite come back into the market, and that's where people may start just bottom fishing in these. So they could turn around quick. That's again the daily chart. Oh, targets. Well, that was big support there. That'd be a minimum target 16. What is that? 1658 from where we're at right now. That's about a 45% return. You get 45% on this, take the money and run. That's what I'd do. And on Bitcoin, 24. These are old lines. I've had the. Oh no, you know what? I'm going to give you one more. There's a reaction low right here and a gap. So 2240 and then 2413 if it can take that out. And that would be from where we're at today, 24 and about 35%. And that would probably be it for me. At this point, we should add a downtrend line there. That's also going to come into play. So that would be, here's your potential bounce target right here, whether we go down a little more or not. So you may want to scale in instead of a hard buy here would be my preference. And then the other one was ETCG. That's the original Ethereum. Little downtrend line popped recently, divergent low. Target, I might modify this again. I haven't. Yeah, I'll leave it there. It's give or take. There's a gap right there, and then the top of the gap that was the bottom is right there. And then I had a line in somewhere in the middle there in that range. But if it's going to go up, it's going to go in line roughly with the others. And I think that upper line there, about 1211, that'd be about 28%, is an ideal swing target. Could do more. May not. I don't know. Big support down here at 466 if it gets there, but you don't want to ride that out because that's another 50% downside. Okay, I'll give you a quick update on bonds. Like I've said before, my whole reason for entering them a few weeks back was that the charts were constructive and the risk reward, the downside appears minimal at this point. My guess, Fed's going to come out next meeting and say or indicate something that might be a little bit more dovish. But who knows? The charts are constructive. I haven't re-entered. I told you I rolled out because I was going to roll the futures. Had to sell the ones that were coming up. But this may continue to work its way up. But here's the next target. We're coming up on 143, and to me, it's opportunity cost. I was using this as a hedge before, but again, I'll just stay out for now. They're not doing much. I don't see any explosive moves coming in treasuries over virtually. That's CV, the 30-year bond, by the way, guys, if I didn't mention that. So still, chart looks constructive. I mean, if you have bonds, you might want to hold them, keep them as part of a diversified portfolio. But if the stock market continues to go up, we may see you get a little bit of divergence. You may see some profit taking in bonds because usually bonds will go down. Stock market's rallying. That means it's a risk-on environment. Bonds are a risk-off trade. But there's so much else, so many more factors going on. This is not your normal market. And the Fed has never, in the history of the central banks, has there been so much manipulation in the bond market with their bond purchases and now quantitative tightening and artificially low rates are too low too long. So don't try to use the common logic that bonds should go up for this reason or that. In other words, the fundamental aspect. I'll factor that in. I talk about it a lot, but first and foremost, go with the charts. And there's a little uptrend line to watch, and they're in a near-term uptrend now. This ZN, the ZF, this is a 5 years coming up to that next target I gave you at 114.054, and still has a chance to work its way up here to 114.260. Remember, you're going to have less risk in ZF, and ZF is the 5 year. And again, this is all recap. I told you if you don't trade futures, you can go with IEI, the 5 year bond ETF, and that's that right there. A little divergent low, and it's working its way up. So they're profitable trades. They're just, I told you before, they're not going to go to the moon. Because they're government bonds, so they move a lot less. And there's a little bit of resistance here too. There's IEF, the 10-year, and then of course TLT was our 30-year. So they've all moved up. TLT is a downtrend line resistance, right around price resistance. And if the Fed does something to convince the markets that they're going to kind of back off on their planned aggressive rate hikes, you could see a nice rally in bonds here, and that would be a beautiful target or a time to sell all in any and all longs in TLT about 133 to 134, and then enter back short if we happen to get there. Again, I don't think it's going to be a straight line up if we do, but remember, when we fell here, long-term rates, interest rates that is, ran into long-term resistance on the 5-year, the 10-year, the 30-year, and that's why I said the risk reward, and they look good from a for a bounce trade at least. All right, let's wrap it up here. Get the video out to you guys, and we'll pick it up tomorrow. It looks good. Remember, depending on your skill sets, if you're not a very active and nimble trader, adept at day trading and reversing, probably best to just stay long until the charts tell us not to stay long right now. Don't try to game any pullbacks. If you, I mean, again, if that's your thing, great. If not, you may get out of a trade that doesn't let you back in. So I'm expecting quite a bit more upside if things play out the way I think they will this week and going into the probably next couple weeks at least. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.